now joined by Jayant Acharya, who's the joint MD and CEO of the company. Very good morning, sir. Thank you so much for joining us on ET9. Firstly, to start off with, if you could talk about especially your earnings, what led to the rise in the EBITDA per ton in the quarter gone by? Was the rise completely because of the fall in the coking coal costs, or are there any other reasons that you would attribute it to?
Yeah, I think if I just look at it on a macro basis first, I think India had a very good domestic demand, which grew at about 14.9% in quarter one. On the back of this growth in demand, the Indian operations of JSW Steel improved the sales. It was at an all-time high in quarter one, driven primarily by domestic sales. We increased our value-added and downstream products, the special products piece, VSP, share at 64%, and that was value accretive. So in spite of a softer price environment because of international pressures, we were able to deliver an improvement in the realizations by about 550 rupees in India on a per ton basis. Our overseas operations were slightly weaker, especially in US, because the prices in US fell sharply during this quarter, and that impacted the margin, especially at Ohio. The Italian operations have been stable, and we expect some improvement going forward into Q2. US operations have also, good thing is, by and large stabilized, and they, from a volume perspective, they're doing well. India, we expect that momentum to be strong, so therefore steel demand in India will continue to be the main play.
And so where do you see the EBITDA per ton to hover around for the rest of the FY25, especially for the Indian operations?
So one thing I would just like to clarify on the EBITDAs which we have declared for our console, it was at rupees 9,007 per ton. Our Indian operations EBITDAs are close to 9,200 rupees per ton, slightly higher, driven by, as I said, domestic demand. There is a one-off in this of about 2,000 rupees per ton, which is including the inventory revaluation which has happened because of the cost falling, and that's something which is likely to come back. Inventory valuations again may come up if the costs go down. We are expecting in the next quarter our costs will be better. We have seen softening of coking coal which will flow into quarter two. We expect about $23 to $28 of range drop. So let's say somewhere in the middle we see a drop in coking coal going into quarter two. Iron ore prices have just corrected and in the domestic market, and that would benefit us again in the quarters two. So the cost will be lower, and that will support the margin spread going forward. Our mix of value added and specials which we are driving will continue to improve. Our volumes, because there was a shutdown in existing operations, and that is why the production volume was lower. Our shutdowns have been completed, so the volume will increase from the existing operations now in quarter two. And our expansions in Vijayanagar and BPSL both are getting commissioned and will start operating this quarter. So that will give additional volumes from both the new facilities ramping up in quarter three onwards.
Let's now shift focus to the steel prices. If you look at the domestic HRC prices, they have actually now corrected further to about 54,000 rupees per ton levels. Where do you see this prices actually hovering around for the rest of the FY25? Any estimates that you all have actually chalked out for the steel prices going ahead?
So it's difficult to comment on the price because that's not something which we have a direct control on. But what we have a control on is cost, and that's something where we are taking various initiatives other than coal and iron ore. Our regional procurement of iron ore, because our new mining operations in Karnataka has also, for the increased EC capacities have started. So more captive regional consumption is likely in the coming quarters. That would improve the overall mix. We have taken various initiatives to reduce various efficiency parameters, including the fuel rate. And from a renewable energy standpoint, we had last quarter also declared that we are putting in additional renewable capacity, which will reduce our cost. We are in this board also, we have taken a decision to further add 600 megawatts of renewable capacity to Dolvi Works. So we will have a substantial renewable energy capacity at the end of this completion of this phase, and that would again not only be sustainable in terms of reduction of the carbon footprint, but it will also reduce the cost. Other cost initiatives such as the slurry pipeline, which we are building in Odisha, will sharply reduce the cost of logistics and iron ore movement. I think that's going to be a very big positive, which the slurry pipeline is doing well. I think more than half is done, and we should see that getting completed in the next 2 years.
So we also understand from our sources that steel industry has approached the government to check increasing steel imports, as you were also mentioning, that China imports have been increasing. So do you expect some relief to come in from the government side in the upcoming budget?
That remains to be seen. I think we are taking up with the government for various measures, including anti-dumping or other appropriate trade measures, which will be necessary to contain this. Why it is important is because the rest of the world has already put up barriers to these kind of trades. And if we don't do, India being the fastest growing major economy in the world, we will see more and more steel getting diverted to India. So it is very important for the government to take an action quickly. The Indian steel industry and JSW is building capacities at a very fast rate in line with the Make in India vision of the Honorable Prime Minister and the National Steel Vision of 300 million tons of capacity in steel. So a lot of capex is being put on the ground. It is therefore important that the capex investment is safeguarded and we don't allow unfair trade at predatory prices coming into the country. We do expect a positive response. I think we will wait and see how it goes.
So are you expecting the hike in custom duty to be hiked for steel products, say from current 7.5%? How much hike, kind of a hike are you expecting to come in, if at all?
I will not be able to comment on what measures the government may take right now to, basically restrict this kind of trade. But that's why I'm saying there will be a trade measure which we are looking at. It could be a combination of measures which would basically arrest this kind of a trade. It can be a combination. Very difficult to forecast. It's something which we are talking to the government about, and I think we will see how it goes and what steps they are able to take.
Right. Let's shift focus then. There are reports that are suggesting that NMDC Steel is at an advanced stages of strategic sale. Are you interested? Is the company interested in that? Have you already expressed your interest in that, with that regard by any chance?
We have in the past submitted an expression of interest for the NMDC asset when it came up. After that, there was a hiatus, because of the code of conduct. We look forward to any change in the scenario going forward. As of now, we don't have any official intimation, so we'll see how that asset plays out.
So let me ask you about this also. So Vedanta Steel assets are also on the blocks. Any comments on that particular front? Any sort of view that the company has? Are you all looking at it?
No, that I think we have discussed in the past. We are not looking at the steel asset of Electro Steel, if that's what you're talking about. We remain interested in the mining asset which they have, which is in the south of the country in Karnataka and Goa. Other than that, we are not looking at any steel asset right now on the cards, but we are looking and continue to search for mining, coking coal, high-grade mining assets in the world globally, which make strategic and commercial sense for prime hard coking coal. That we have communicated earlier as well, and that we continue to look at.
Well, that was the management of JSW Steel on ET Now. With that, let's slip into a short break and we'll start.
If you like this video, then like, share and subscribe to ET Now.